Taking on credit has inherent risks. Savings has inherent risks. And what you use it for, by the way, you can use that also to change behavior. Payment has inherent risks. So it's not like insurance is this standalone product that you wake up in the morning thinking, I'm going to have my breakfast and then I'm going to buy insurance. It has to be associated with the risks that characterize your everyday lives.
This is Financial Inclusion Unlocked, an SIJ production.
Welcome to the Financial Inclusion Unlocked show hosted by me, Jack Farron. This is the podcast meeting sector leaders and innovators across the globe to discuss how we can unlock the potential of financial inclusion as an enabler for the SDGs. This is a podcast that is produced by SIJ Media, and our first series is supported by the Swiss Capacity Building Facility. Too rich to be poor, too poor to be rich is the client segment coined the missing middle that we will be discussing today. In this episode, I had the pleasure of meeting with Garance Wattez-Richard. Garance served as head of external communications for the AXA Group before founding AXA's inclusive insurance business in 2016, which is now called AXA EssentiALL. She was awarded the Intrapreneur of the Year by the Schwab Foundation for Social Entrepreneurship and the first Women in Insurance Award by the Geneva Association. In our discussion, we reflected on her social intrapreneurship journey, which has led to AXA EssentiALL now serving over 14 million customers in 22 countries. We also chatted about her new book, Middle Classes Cannot Be Left Behind, a call to action. I hope you enjoy it. Thanks so much for joining me on the Financial Inclusion Unlocked show.
Thank you, Jack, for inviting me. I'm very happy to be here.
Reading a few of your blogs and posts in the past, I noticed one of your favourite phrases was, if you don't ask, you don't get. So taking you back to 2016, I'd love to understand, how did you convince group management to start an inclusive insurance business? How did you pitch that?
That's funny you should pick up on that, because it's almost in contradiction with another thing I like saying, which is, you shouldn't ask for permission, but for forgiveness. But then I'm saying, should you ask? Should you not ask? Obviously, it depends on the situation. In the way you've coined the question, it's a perfect theoretical question. But as always, that's not how things happen, right? So I didn't pitch an idea. Like it doesn't really work like you pitch an idea in front of a board or a management committee of an ExCom, and then they like this and they don't like that, and then you decide on a budget, etc. In a lot of these circumstances, and I think this is in particular true for intrapreneurship, because intrapreneurship is very often going to be linked to either social or environmental topics. Why? Because if it's not, it's more, let's say, pure innovation, and that fits directly inside of any business, right? And it doesn't need to be viewed or set up, let's say, as intrapreneurship or as an entrepreneurial venture, because then it's directly linked to the business. So maybe sometimes it's circumvented or ring-fenced to protect it, let's say in the beginning, as sort of early implementation phases or infant phases. But it's not really entrepreneurship. Here, that's why it's not like it was pitched. It was more like senior management with a CEO having a vision, starting to realize that we're not the first ones to move on microinsurance. Far from that, right? So you have other big groups in the insurance industry, or even local insurers or regional insurers that have been doing what's called microinsurance for way longer than us, but it's very much equal to credit term life or credit life, right? So adding insurance to small loans in case the borrower doesn't pay everything back, right, in case of default. But what the CEO said was, well, we kind of, maybe there's an opportunity to go further. And I think it was driven by a desire to create social impact, but also a desire to find areas of growth, right? And if you think about it, there are a lot of players in the insurance industry, in many industries, that are fighting for the tip of the iceberg, which is quite saturated. So I heard this in the sort of grapevine of the corridors of AXA. And at the time, I wasn't at all in this area. So initially, I thought, that I shouldn't even, put my hand up, because I didn't have at all I didn't tick the boxes, so to speak, right? And then I thought, but maybe I should go and see the CEO. And so I thought, okay, let me look if I can make an appointment in a couple of weeks or something and get myself prepared. And I remember calling his assistant and saying, I'd like to meet him just to understand what this is about, right? And she basically said he has space this afternoon or in 3 months. So in 3 months, it was too late. And this afternoon made me want to cry. So I went that afternoon, and he kind of said, well, the process is very advanced. So I can put you in it, but you will have to go through the same process as everybody else. Which I have to say in the beginning kind of annoyed me, because I felt like saying, I have proven my worth, so to speak, to the company. So why am I put, on the same boat as external candidates? Because it was only external candidates, the others. And of course, since then, you see why CEOs are CEOs or deputy CEOs are deputy CEOs. It's because, they're extremely smart. And it was so that I had the legitimacy should I end up, getting the job. And what's interesting is that first of all, is I raised my hand, right? Because nobody really knew my interest in this. Nobody knew that I was a UN child. Nobody knew that my passion had always been sort of development and social impact. So they didn't naturally turn to me. So there it's, if you don't ask, you don't get, kind of. And I got the job, I think, yes, of course, because, I had this passion and this background, but I was far from being as knowledgeable as the external candidates with regards to this addressable market, with regards to financial inclusion, which at the time was not as well defined as it is today. There is much less awareness around it. People didn't know if it was CSR, if it was philanthropy, what was the market to really be targeted, etc. So, when something is just budding and a market is being created, it's probably better to at least take on someone who knows what the hell they're talking about. But I think I got the job because I was internal to the company. And this is an area, a business, a market that we're contributing to creating and have been for a while, since 2016, as you said, that meant addressing new customers that we didn't know at all through using new ops and IT with new products and new distribution channels. And so, this was it's like when you have a organ change. How do you know that it's going to take? Right. And what's for sure is that it's not naturally going to take, because intrapreneurship is innovation, and it's completely something that doesn't naturally obviously fall into the business as it's defined today of the company you're doing it in. So if you take someone from the outside to develop a market or a business that hasn't been at all thought about, that is in nobody's objectives, and it's aligned in interest with no one's interests, then everybody's going to stop you. So you need to have someone, at least it was the case here, and that's why they made this decision, to at least, call people. That person has to have people on speed dial, right? And have already built a reputation, kudos, etc. to in the beginning, not their face sort of, the door smashed in their face. So that's if you don't ask, you don't get. Then there's the rest of my time since then has been about asking for forgiveness and not permission.
And I heard that also applies to your staff as well, sometimes.
It's a problem, right? So once you've said that, you feel so smart and, oh my God, I'm so cool and whatever to have said that. But then your team, which, by the way, I built really extremely slowly, because the luxury of having started this business is that I started quasi alone. I started with one other person that was already in my team at the time, called Quentin Gisreau, who is, a co-founder, along with then very quickly somebody called Laura Rosado. But you take time, right? Because you cannot get it wrong. You cannot get you have so little resources that it's it is the quintessential potion, magic potion, right? And then when I started saying you have to ask for forgiveness, then ever since, we have grown to be quite a team, because we cover now, 22 markets. They keep saying sorry, which is you should have told me. Yeah, but you keep saying we shouldn't ask for permission. Yeah, okay.
Yeah, it goes two ways. So if we look at the AXA EssentiALL, the business, I know you've been quite clear in terms of the client segment. You've coined it as, too rich to be poor, too poor to be rich. So what does that exactly mean?
So it's in many countries, emerging markets, let's say, but it's also the case in mature, when you're below the poverty line, which in most mature markets is defined as 60% of median revenue. In emerging markets, it's less formally defined. But let's say when you're at the bottom of the pyramid, you are actually to some extent covered. You're covered by mandatory sort of public insurance systems with regards to health. And if not, what's interesting and what we discovered when we started, because my initial mandate was, it was coined and summarized in one sentence. It was start where insurance stopped. And so I think we all thought that insurance stopped at the bottom of the pyramid, right? And if I divide the income pyramid in 5, A, B, C, D, E, going from high net worth to mass affluent, mass market, low income poverty, we thought we would be covering poverty. But not only is that covered by public assistance, so to speak, or public services, but it's actually quite crowded, the space. There are NGOs, there are multilaterals, there are bilaterals, there's, as I said, the government, there are philanthropy organizations, etc. So that's what I mean by being too rich to be poor. It's that you're not poor enough to fit in that category, right? To be automatically covered and given almost charity to, rightly so. But you're also part of this population that does not want to be given charity to, that the last thing they want is to be told that they need to be, taken care of almost like children. So that's that. And then too poor to be rich is that, on the other hand, you're not affluent enough to interest the private sector, right? Because you're not able to pay such high prices for whatever goods it is that they're selling or services. And so you're kind of in the middle. And when it comes to the emerging world, this represents 70% of the population, 70. Okay, that they're on an aspirational path, so upwards trending, as they are sort of growing and changing social status, becoming increasingly educated, becoming increasingly rich, so to speak. So they're like transitioning, but it's going to be a while before they transition into this more sort of affluent strata of the population that is going to instinctively interest the private sector. So that's where that stands. And, it always makes me think of this. I was really this is stuck in my mind when I was listening to Paul Paulson, who at the time was the CEO of Unilever, and who really, really significantly contributed to laying down the foundations of financial inclusion and inclusion in general, food inclusion, digital inclusion, health inclusion. He said, a company in the 21st century will not be able to become or remain a leader, a global leader, if it doesn't understand the mass market. And I continue to think we're in the first quarter, and I think he's very right.
We're about to get back to the episode with Garance as we dive deeper into the work of AXA EssentiALL and hear about her new book. But beforehand, a quick mention for our series sponsor, the Swiss Capacity Building Facility. In 2022, 63% of India's population lacked health insurance, leaving low to middle income families without coverage. Whilst they have the willingness and capacity to pay, the market lacks tailored financial solutions to meet their needs. So SCBF is supporting SART Health, a digital health platform, to strengthen financial and health resilience for this segment. SART Health delivers preventative health content in local languages through interactive formats, enhancing health and financial literacy. And by engaging users, it helps families build health savings and connects them to trusted financial service providers offering customized solutions. By the end of this project in February 2025, SART Health had achieved a reach of 74 million people, with 1.2 million accessing financial literacy content. Together, SCBF and SART Health are empowering India's missing middle with tools for health security and financial resilience. Let's get back to the show. Garance, AXA EssentiALL is now operating in 22 markets.
So you mentioned before that to reach this target group, you need to have new IT, new products, new ways of also distributing. And in your new book, which we'll talk a little bit about later on, you mentioned around innovation going beyond technology and rethinking the way that we address the risks faced by populations. Involve the business model, the value proposition, the partner ecosystem, and the customer experience. So let's start first with the product side. So in terms of AXA EssentiALL's product offerings with AXA local offices in these 22 markets, what are some of the key products and coverages that you're focusing on?
So yes, it's true that I find, at least, but maybe you won't agree with me, but that innovation is very often equated with technology in this day and age, right? But it can concern anything. And then there's also sort of big bang innovation and incremental innovation. And there's also the fact that I think we just use innovation for anything. And we have a tendency of thinking it's a synonym for progress. But there's progress and there's innovation. And both are necessary. And progress is just that it's better, or it's quicker, or it's bigger if need be. So with regards to innovation, yes, it went. In terms of products, we cover all risks today, life and health and protection, as well as P&C. And it's interesting because we've expanded to the European world, so European markets since last year. In a way, unfortunately, in the sense that we assessed and clarified that there was a need for simplified, more accessible more affordable, more relevant, more attractive products for this population that represents 25% of the population in Europe. And when you look at now the sort of two groups, let's say, in Europe, our business is very much driven by P&C, and in the emerging world, very much driven by life, health, and protection, right? So, and that's not necessarily something I was expecting. Also, the distribution, although when you think about it, it makes a lot of sense, and the distribution is also very complementary in the sense that in Europe, we are going to look very much at agent distribution, much, much less in the emerging world. Until a couple of years ago, it wasn't even fathomable, right? And now we're actually starting to look into that and piloting things, etc. But yeah, we cover all risks. Now, there are several things. We will innovate on the product because one thing we're trying to obtain is that there are very few exclusions. In the emerging world, and this goes with accessible, right? Accessibility and affordability, because we're also trying to have products that don't necessitate individual underwriting. So it's automated underwriting. It's forfeit based. So it's like lump sums. It's as much as we can group contracts and not individual contracts. All of that is to simplify, reduce costs, and reduce the amount of information we need from people, right? Because if the premium is going to be low, then it's a volume game if we want to be profitable, right? And if it's a volume game, we can't be asking people who have spent 3 nights in the hospital for the exact bill they've received and, what have they received as treatment, etc. We just need to know that they were 3 nights in the hospital, right? And that's where we try to really limit exclusions. But because the insurance is built and survives or grows actually in a more positive spin, in great part because the two things we fight against is fraud and anti-selection, then we have to find ways of avoiding that, but not through exclusions. So that's a great part of the innovation that drives us from a product point of view. Now, the other element that drives us, which, given that your series of podcasts is focused on financial inclusion more largely beyond insurance, is that, I always think of financial services as a square. So you have credit and then savings and payments and then insurance in that order. And people have a tendency of seeing it as a sequence. But I think every single person, every single company, every single organization will have its own equilibrium of financial services square. So will have its own financial services square. So if you're a company starting, you're going to have heavy credit, less savings, be more and more dependent on digital payments to go quicker, for it to be cheaper and safer. And you're going to have different risks, a different risk landscape associated with that. But that part of protecting the risk landscape should not come last, like once you've done everything else, because taking on credit has inherent risks. Savings has inherent risks. And what you use it for, by the way, you can use that also to change behavior. Payment has inherent risks. So it's not like insurance is this standalone product that you wake up in the morning thinking, I'm going to have my breakfast and then I'm going to buy insurance. It has to be associated with the risks that characterize your everyday lives. And so in terms of innovation, it's also associating insurance with the other financial services, but also other elements of inclusion, like I was mentioning in the beginning, digital inclusion, health inclusion, education inclusion, food inclusion, right? It's associated with, in a way, insurance is not an end, it's a means to an end. And that's where we really have to innovate, and also innovate in terms of awareness and understanding, because we are an industry that's often assimilated to a black box where, we don't have that great a reputation for founded or unfounded reasons. But the point is to say, when you see that the Sustainable Development Goals don't mention insurance, right, at the first level, and that it's mentioned once on the third level, and that Findex up until today didn't include us, etc., that's where you see, well, we also have innovation and progress actually to make in terms of where that fits to better drive financial inclusion overall.
Yeah, in the emerging countries that you're working, I guess you're even creating your own market, right? With populations that have never had formal insurance products before. And I'm always really interested, especially, personally, I've, met with, many smallholder farmers who have never experienced insurance and had some very interesting analogies about their perception of what insurance is. So what is the importance you place in trust of partnering with maybe non-traditional distribution partners that have that trust with, whether it is the smallholder farmer or the MSME or the mom and pop shop?
Yeah, those are exactly the segments we're looking at. So factory workers, MSMEs, smallholder farmers, owners of retail networks, exactly of FMCG, mom and pop shops. This is a way of looking at the segment that the markets we're trying to cover through their activity, right? Through their work, the nature of their work. But if you go for distribution partners like telcos, it'll be overall making an offering that doesn't take into account necessarily your job, but who you are. Do you have a family? Are you looking for protection, etc.? We have a tendency of going less and less through distribution channels that are where we're not able to be a bit more specific so as to add more value to your point. So yes, you're absolutely right. The key word is trust. The second one is penetration, in the sense that yes, we're working with existing networks. So yes, telcos, e-wallets, e-commerce platforms, but very much also microfinance institutions, small finance banks, financial institutions, but also industries that have agents on the ground, right? But they can't only have just a few agents or a few antenna, right, or a few branches. It has to be all over the country. It has to be very penetrated. It has to really go from urban, semi-urban, semi-rural, rural, to be able to work at all. Again, back to my volume point. And so if I focus on your question with regards to smallholder farmers, you know what? They actually know what risk management is much better than we do. They're much more sophisticated in managing their risk landscape than we are. But they just don't call it insurance, and nobody has shared that risk with them. So by definition, we're not going to arrive as AXA. First of all, we can't go smallholder farmer by smallholder farmer, so we have to find an organization that will bring them together and aggregate them. And we have to use the trust and the relationship that this organization, so for example, agricultural cooperatives, will have put in place, or networks of microfinance institutions from which they borrow on a seasonal basis, depending on their crop, etc., that can explain what it is in extremely simple terms. We can't go, if you take a telco, now we don't distribute that much through telcos anymore for the reason I was saying before, which is that we can't make it extremely specific. It's harder. But just for the sake of an example, when they take when they charge their prepaid SIM card, it works, right? So if we're going through a telco where their lifeline depends on it, and every time they use that brand in their head, it works, then there's absolutely no reason, and it would be counterproductive for us to use our brand. It doesn't bring anything to use our brand. This is not a branding game. It's really a volume game.
So let's look at maybe a couple of examples of different types of distribution partners that AXA have successfully worked with. So maybe we can touch on something in agriculture to start with.
Well, cooperatives is a really good one. We'll very much go through cooperatives because they're both knowledgeable with regards to the crops and everything being produced by the farmers, but also with their financial needs. And so either these cooperatives will include a form of lending capacity, or they will be the ones who will put the farmers in touch with the financial institutions, so very often MFIs, microfinance institutions, to provide the seasonal loans. Okay. In some cases, what we did is we also provided insurance through small shops that were the shop networks that farmers went to buy their seeds and their fertilizers. Okay. And then if I caricature, the idea was to say, if you buy fertilizer 1, then you need to buy fertilizer 2 to make fertilizer 1 really work. So you start with fertilizer 1, and then 3 weeks later, to increase productivity, you need to do fertilizer 2. And one of the problems was that they were buying only the first one and not finding it necessary to buy the second one. And an incentive was to say, if you buy the second fertilizer, then there's a one-time password in the second fertilizer bag, and you get free insurance. Because this is also a way of illustrating that when we offer insurance, it's to protect the farmer in this case, and in order for the distribution partner to also find an interest in doing it, to tick the strategic ambition of this distribution partner. And in this case, the distribution partner was the fertilizing company that was not able to sell its fertilizer number 2, and therefore its fertilizer number 1 had a bad reputation because they were under the impression that it wasn't, leading to enough productivity because they weren't doing it right, so to speak. And so there was this one-time password that was in the bag, and they had to type it on their phone, and it was the teller that explained how to do it. It worked actually quite well. You want me to tell you one of our biggest problems is that what we forgot about was humidity. And so the little tickets we put in the fertilizer bags were made out of cardboard, and they got all wet, and you couldn't read the one-time password anymore. But those are the types of distribution networks we're going to use for smallholder farmers. When you work with smallholder farmers, you can use FMCG. So if you think of L'Oréal, Unilever, Chanel, Danone, what have you, they know extremely well their supplier chain upstream. And they have a series of strategic ambitions that they need to tick that isn't easy. So they will also be looking for incentives for their supplier, for the supply chain part, the upstream part of the supply chain.
Interesting. And maybe away from smallholder farmers, I know you've also worked with post offices. So, for example, in Egypt, how does that type of partnership work?
In Egypt, we've just signed, 3 months ago, 4 months ago, we signed an agreement to set up a JV between AXA and the sort of private equity arm of the post office there, because we can't set up a JV with the public institution. The objective of which is to use the post office, the Egypt post office's network to distribute insurance. And so there, the subject is what kind of products are the most needed for the people who go and see the post office, and how do we integrate, because we want this JV to be sort of the first micro-insure tech with a balance sheet sort of company in the world, so to speak. So that really means getting everything right. So it's taking a bit of time. It hasn't been set up in 3 months. It's there's regulatory issues linked to decrees. If you're setting up a standalone microinsurance company, are you required to have the same level of reserves? What are the solvency requirements? Is there more agility? Can you distribute protection and health, but also P&C, et cetera, et cetera? So it's going to take time. And back to your point on trust, right? And so we're working with a few other countries, and actually not only emerging with regards to post offices. We've just finished the first phase of a project we've done with the Universal Postal Union, which is a UN agency that groups basically all the post offices in the world. It's quite unique in the way it works. All the CEOs of the post offices know each other. And we've just done some research with them and a consulting company called Histra to understand. So we've based ourselves on 6 countries. It's going to be open knowledge, both emerging and mature, and looked at the different models that exist between post offices and insurance to drive financial inclusion. Because in some cases, they will have equity in an insurer. In some cases, they will have exclusivity agreements. In some cases, they will have different forms of partnerships. And so we've looked at what works, what doesn't work, in order to feed phase 2 of this project, which is called, an extremely sexy word, which is PTAF. The objective is we are reaching out to other insurers and reinsurers, either directly or through the Insurance Development Forum, to bring them on board to sort of provide early implementation subsidy and technical assistance to decide in their geographical priorities what countries they want to work with the post office in, and to develop pilots, but to do it as a group so that we kind of learn from each other. We're not, as AXA, going to work with all the post offices in the world. First of all, we're not present in all the countries in the world, and we also have our priorities. So we're trying to make this a sort of open knowledge project to be able to learn from the first phase of the research.
Fantastic, Garance. And I know you talk a lot more about distribution and also the wider journey of AXA EssentiALL in your book here. Middle classes cannot be left behind, a call to action. So why did you go on the journey of writing the book, and how was that experience? I'm sure it was quite a long experience.
Actually, it was really exciting. And again, it's a book, but it's not a book. It's composed of 6 interviews between myself and a sort of recognized player in the financial inclusion space, from both emerging and mature countries, from the public sector, from the private sector, from academia. And the objective is really to say, okay, what have you learned? What have you learned, and what do you want to pass on as to save people time to make maybe less mistakes? So the sort of the red thread is that it needs to go from client insights to innovation to scale. Okay, that's a no-brainer, kind of. I feel like I'm sometimes open doors, as we say in French. But then the idea is to say, this is what we've learned. These are our convictions, and this is the direction we think financial inclusion should take. And, in the beginning, when I was contacted by the publisher, they have the New Deal collection is about intrapreneurs, right? But, I'm not sure it's interesting, right? But entrepreneurs, what's interesting with them is to meet them. I'm not sure reading about their lives is the most exciting thing. But here the idea was to bring people together. And why did I feel like I had the legitimacy to be the one bringing people together is that I'm fundamentally convinced that vulnerability is not a situation, but it's a risk. And we've often said it's a situation as if people who were modest or vulnerable financially were like stuck in a situation for life, but it's a risk. And what is that risk? It's the risk of not being able to make ends meet, right? And that's a risk that's a moving risk. So if it's a risk, then who is better placed than an insurer to bring people together to talk about risk? And they'll each have their point of view. But I think insurance has legitimacy and credibility in facilitating a discussion about risk. That's why I decided in the end to write the book. It's not like I took my pen and paper and I wrote 120 pages. Again, it's interviews. Now, I wrote my convictions, I think, as like the transitions, that are between chapters or the introduction, but really it's very much about them as much as it is about AXA.
Yeah, I thought I wouldn't find an insurance book so interesting, but but there you go. So it was interesting, to have that perspective, especially from some of the from some of the interviewees from MasterCard and Nickel and some very interesting organizations across the book. And we'll make sure for listeners to leave the link for the various platforms to purchase the book in the show notes, and also your LinkedIn account if anyone wants to follow your journey further. But Garance, thank you so much for being on the show. And one final question, what is the goal for AXA EssentiALL in the longer term? Where are you trying to go, and what are the targets you're trying to achieve?
Well, I think that's an easy and a hard question, right? But I would say in a word, it's to cover as many people as possible while they transition, and then one day for there to be no reason for us to exist anymore, I guess, because it would mean that people don't need us in their lack of vulnerability.
This was Series 1, Episode 9 of the Financial Inclusion Unlocked podcast. Check out the other episodes in this series as we talk all things financial inclusion. A special thank you to the Swiss Capacity Building Facility for sponsoring our first series. To learn more about how they are innovating in inclusive finance and how you or your organisation can support their work to fund more transformative projects, visit www.scbf.ch.